Imagine waking up on a Tuesday morning, checking your phone, and seeing that while you were sleeping, 3 different companies deposited cash directly into your bank account. No boss, no 9-to-5 grind, just pure passive income. In 2026, the market is more volatile than ever, but there's a secret group of stocks that have not only survived every recession for the last 25 years but have actually increased their payouts every single year. These are the Dividend Aristocrats, and today, I'm showing you the top 7 you need to own to build a bulletproof portfolio for the future. Before we dive into the list, let's talk about why 2026 is the year of the dividend. We've moved past the wild speculation of the early 20s. Investors are no longer chasing get-rich-quick crypto schemes, they're looking for stability and real cash flow. A Dividend Aristocrat isn't just a good company, it's a member of an elite club in the S&P 500 that has raised its dividend for at least 25 consecutive years. That means through the 2008 crash, the 2020 pandemic, and the inflation spikes of 2023, these companies kept paying their shareholders more and more. Coming in at number 1 is a household name you likely use every single day: Procter & Gamble. Think Tide, Gillette, and Crest. In 2026, regardless of what the economy is doing, people are still brushing their teeth and washing their clothes. P&G is the ultimate defensive play. They have a massive moat and the pricing power to stay ahead of inflation. If you want a stock that lets you sleep at night while the world feels like it's falling apart, this is your foundation. It's not about explosive 100% gains, it's about that steady, growing check hitting your account like clockwork. Next up is a beast in the healthcare sector, AbbVie. As the global population ages, healthcare spending is only going in one direction up. AbbVie has successfully navigated patent cliffs and continues to innovate with a massive pipeline of new drugs. What makes them a standout for 2026 is their commitment to shareholders. They offer a higher yield than many other aristocrats, making them a favorite for anyone looking to maximize their immediate income. They aren't just a pharmaceutical company, they are a cash flow machine that understands how to reward loyalty. Now, let's talk about my personal favorite for monthly income, Realty Income, also known as the monthly dividend company. Unlike most stocks that pay you every 3 months, these guys pay you every single month. They own thousands of properties leased to reliable tenants like 7-Eleven and Walgreens. In the 2026 real estate landscape, having a REIT that focuses on triple net leases is a massive advantage. You aren't just an investor, you're essentially a digital landlord, collecting rent from some of the biggest corporations on the planet without ever having to fix a toilet. At number 4, we have Lowe's. Now, you might be thinking, what about the housing market? Here's the deal for 2026, even if new home sales slow down, people are choosing to renovate and improve the homes they already have. Lowe's has become incredibly efficient with their pro-segment sales, and their dividend growth rate over the last decade has been absolutely staggering. They don't just raise their dividend by a penny, they've been known for double-digit increases. It's a perfect mix of a value play with the DNA of a growth stock. Number 5 is the king of beverages, Coca-Cola. It's the ultimate Warren Buffett stock for a reason. Coke has a distribution network that is unmatched by any other company on earth. In 2026, they've successfully pivoted toward healthier options, sparkling waters, and even coffee products. They are a masterclass in brand loyalty. When you buy Coke, you aren't just buying a soda company, you're buying a global infrastructure that generates billions in free cash flow. It's one of the safest bets for your retirement fund, providing a reliable yield year after year. Moving to number 6, we have Target. Target has mastered the omni-channel retail experience, blending their physical stores with a seamless digital app. By 2026, they've solidified their position as the go-to spot for the middle to upper middle class consumer who wants quality without the luxury price tag. Their store-within-a-store partnerships with brands like Ulta and Starbucks make them a destination, not just a shop. For investors, Target offers a very sustainable payout ratio, meaning there is plenty of room for those dividends to keep climbing for another 25 years. Finally, at number 7, we have S&P Global. This is the toll booth of the financial world. They provide the data, benchmarks, and credit ratings that the entire global financial system relies on. If a company wants to issue debt, they usually have to go through S&P Global. This is a high-margin, asset-light business that scales incredibly well. In 2026, as the markets become more complex, the demand for their data is at an all-time high. It's a sophisticated pick for the investor who wants exposure to the financial sector without the risks of a traditional bank. Now that you have the list, we need to talk about the magic ingredient that turns a small portfolio into a fortune: DRIP. That stands for Dividend Reinvestment Plan. Instead of taking that cash and spending it on a latte, you tell your brokerage to automatically buy more shares of the stock. In 2026, with the power of compounding, those extra shares start earning their own dividends. It's a snowball effect. Over 10 or 20 years, the majority of your total returns won't actually come from the stock price going up, they'll come from those reinvested dividends compounding over time. I want to be real with you, investing in 2026 isn't without risks. Interest rates and geopolitical shifts can still cause market swings, but that's exactly why the Aristocrat strategy works. While everyone else is panicking and checking their portfolio every 5 minutes, you can stay calm knowing your companies have the cash reserves to weather the storm. You're looking for quality over hype. These companies have survived world wars, recessions, and technological revolutions. They are built to last, and as a shareholder, you are a part owner of that resilience. So, how do you actually start? You don't need $10,000 to begin. In 2026, most brokers allow for fractional shares. You can start with as little as $50 and spread it across these 7 stocks. The key is consistency. Set up an automatic transfer from your paycheck. Treat your investment like a bill that you have to pay every month, except this is a bill that pays you back later. The goal is to reach a critical mass where your dividends cover your monthly expenses. That is the true definition of financial freedom. A lot of people ask me, is it too late to start? Look, the best time to buy these aristocrats was 25 years ago. The second best time is today. By 2026, the cost of living has only gone up, and relying on a single source of income is the biggest risk you can take. These 7 stocks are more than just symbols on a screen, they are your insurance policy against a changing world. They represent the hard work of thousands of employees working to put money in your pocket. It's time to stop working for money and start making your money work for you. If you found this breakdown helpful, do me a huge favor and hit the like button. It really helps the channel grow and lets me know you want more deep dives into these strategies. And if you're serious about building wealth in 2026, make sure to subscribe and turn on those notifications. I'm curious, which of these 7 stocks is your favorite? Or is there another Dividend Aristocrat you think should have made the list? Let me know in the comments below. I read every single one of them. Thanks for watching, and I'll see you in the next one.